Good day, everyone. I trust you are well, and welcome to this week's live trading profits. Really, I want to have a look at currencies in these 15 minutes and gold. But before we go in there, I've got a couple of trades open at the moment. DAX 30 or DAX 40, if you trade it, I'm in long. And I wanted to go long here, but I waited for the market to get above the EMA. So I went long above that. Then I have an order in the market on Hang Seng 50, above this level here. And, we'll see if that gets triggered, but it's got a wide stop down there. What else? I am also in UK 100. Again, waited for the setup and got in somewhere above here. So I'm going to see, the stop is down here, down there. That's where the stop is presently. I am presently looking to just manage those trades as tightly as I can. I've been stopped out a couple of times this morning. So, as far as indexes are concerned, I am at the, close to the maximum in terms of my risk, unless, of course, these trades that I've got open, end up in profit. I think they will. But let's see how it goes. So, I'm just going to keep flipping through and watching on the other screen because I'm managing my trades from there. Now, currencies. I want to see if I can get into the market on any of the currencies. And here's what I'm looking at. This is pound versus the dollar. Now, there is the open of the day. And this was the high of the Asian session, just this level here. So that's the present high of the day. And if we start to get there and possibly have a double top, if I get a double top within here, and from a double top, of course, if I get a decent enough reversal signal, which is, selling back into the trading range, I want to see if I can jump into that. And if I do jump into that, then I'll need to put a stop probably up here. Now, just quickly talking about the stop. Okay, so let's assume, I get a reversal pattern here, a double top and then a lower high, and I'm prepared to sell, hoping that by selling it, I get back into the trading range and I get down to these lows. And if I get down to these lows, if we break through, fine. If we have another reversal pattern, then getting out, because you are at that point trading as a trading range. Now, talking about the stop, here's what I've been doing. So if you look at this trading range here and you're trying to figure out where to put your stop, if you did a measured move, even of just that from there to there, just takes you above the high of yesterday. And what it means is if the bulls are strong enough to break out above here, then they want to go and attack, of course, the high of yesterday, the green line. So if you've got a stop, that's probably the best place to put a stop. If you really want to be ultra conservative, look at the whole trading range and your stop is up here. But you probably don't want to do that. You want to, well, let me not say you don't want to do that. If you do that and you take an entry here, and this is, so let's say somewhere there, this is 32 pips stop. If you do that, you don't have to leave your stop here. So if it says to you, by selling here, you can sell 10 widgets of pound versus the dollar. Fantastic. Make sure you set it up correctly. You sell your 10 widgets. Then you can tighten your stop if you want, to here or even above here. What you have done is you've risk sized it correctly. And you're saying I'm in a trading range. And if I get stopped out, I don't want to sit through all of this pullback, then that's perfectly fine. So I did that a couple of times today just to minimize the risk when I got stopped out, and that's perfectly fine. So I'm waiting to see two things. One, if we get up to here, and if I get a double top, a lower high. Alternatively, we may still, instead of going up here as we're going sideways, we may want to get down here. And if we get down here and we get a double bottom, then of course, I'll be very happy to do the same kind of thing. Look for the double bottom, higher, low, etc. Okay, let's have a look at gold. So gold is another one that I'm looking at to see if I can capitalize on it. And, you know, as far as gold is concerned, all right. What I've just done while we're talking is just come out of my other trades. So as far as gold is concerned, then if you just have a look at it, we are near the high of yesterday. And as long as we're near the high of yesterday, the opportunity for the bulls is to accelerate above it. But the bulls have some constraints. They have tried to break out above here once, and we have a little wedge bottom, 3 attempts to break out above a level in here. So if the bulls are going to break out above this, they need to have sufficient, let's just call it momentum, to get above this level, which is the wedge top, which is where they've tried once, twice, 3 times. That's probably all one set of forces to break out above that. If they're strong, they need to give successive bull candles a breakout above here and then a pullback. Now, something else that's in here. Remember, like we're just talking about the trading range earlier on, and we're saying one way of thinking about it is if I break out above, you know, the high, we were here, and we were talking about that, saying, you know, we're looking for a double top and then a lower high. But then we're talking about where to put our stop as a measured move. And the thinking around that is if the bulls are strong to break out above that, they might want to get to a measured move. So if you take the nearest trading range, measured move is there. That low just above that. So if you come to gold, same kind of thinking here. You would have said to yourself, well, you know, if the bulls are strong, so you didn't get a decent enough double top lower high here. But had you'd have had to put your stop up here, because if the bulls are strong, that's where they want to go. So the bulls can clearly see this. And even though they are being repulsed at every opportunity, what we have is an opportunity for them, you know, without the bears giving us a clear reversal pattern here. The bulls say, well, we can just keep on doing a trading range and ascending trading range until we break out above there. Now, what it means for us, if you're looking to go short from here, if we get, that's good for the bears, if we get a double top and a reversal, 2-bar reversal, you know, any kind of decent structure that you might get anywhere within here. If you do get that, then your stop is going to be guided by these factors. So there was this trading range, there is a measured move. If you get a double top here, then your stop it's going to be at least just above that. In case, you get triggered in and the market just continues to go up a little bit, stop you out, and then accelerate down. So again, I'm waiting to see if the bears that are forcing the bulls, stopping the bulls from accelerating, can give us a double top here and a reversal. If so, and that's one entry I'll definitely be looking at. Aussie, okay, she looks like she is accelerating away. All right, so at this particular point, if you're looking to trade the Aussie, it is best to wait. What should you wait for? Either, where is my key levels? So either a breakout pullback, like we had here. So just like if you're here looking to sell, instead of selling, it would have been better to wait for a breakout pullback, and then, we kind of went sideways, didn't give you the opportunity. So, unless if you're taking a breakout trade, then you're going to have to put your stop up here and kind of manage your trade as it goes through. So it's probably better wait for the breakout and the pullback, and let's see what we get. We still have a couple of hours to the US session, so there's still opportunities for more volumes coming to the market. And finally, Euro. With Euro, what I'm interested in actually is to see if I'll get another double bottom here with this candle, a decent enough reversal. As soon as I get that, I'll be willing to jump into that. And here's what's interesting. If you had taken a trade, let's say you wanted to take a trade up here, your problem would have been where to put your stop. Probably look at that candle in the white stop. But now you have a higher low double bottom. And if you are waiting, like I'm waiting, if I get a candle the same as that candle, if I get that anywhere within here, because now I have a higher low double bottom, my stop will be here. So let's assume, let's say we got this kind of candle somewhere here. That's an 18 pip stop, and my lowest stop for currencies and gold is 25 pips. So I'll just put my stop down here. But I'm not taking that. I want to see if it will come down and try and break beneath the low of yesterday. And if that happens, then I'm going to look for the reversal up. So that's presently what I have on the watch list. As I said, let's have a look. I still have the order here. I think I'm probably going to take that order off. Taking that order off, and I'm out of the trades here. That's a decent enough 2-bar reversal for the bears. I don't know if they'll trigger the sale. And again, also that's not good for bulls. So I'm kind of out, but I'm going to wait to see what other opportunities we get. Let's have a quick look at S&P 500. Okay, so very hard to try and buy up here. Still with a big bear breakout, so we might still get a decent enough reversal and an opportunity for the bears to short. So if I get bear setups, which I might just be getting shortly, I'm going to be looking to sell on the indexes. And I've given you some thoughts on currencies. So that's present where I'm looking at. And we will catch up again next week. And for the guys in the Wednesdays at the market, we will see you shortly and see whether any of these actually set up for us to take trades. All right, guys, thank you very much to the guys in the office for hosting us. And we'll be back again next week for a 15-minute show. Thank you. Take care. Bye-bye.